All market gains since Trump's inauguration have been wiped out. Hundreds of billions of dollars are being taken off the face of this global economy. So if the coronavirus has spooked you, you are in good company.
Right, as we've been saying, another awful day on Wall Street. The market's just closing. Let's take a look. 19,903. The market's down over 1,300 points.
At the Dow Jones Industrial right now, about a minute from the close of the markets, the Dow headed for its worst single-day point loss since the Great Recession back in 2008. There you see it down almost 2,000 points, 7.5%.
U.S. stock markets opened down this morning, despite the Federal Reserve saying it will take unprecedented measures to calm investors' fears. The announcement follows Wall Street's worst week since 2008.
Even very wealthy investors are building up a cash cushion in an effort to protect themselves from this unprecedented downturn. The top indices, the Dow, the Nasdaq, the S&P 500, have all tumbled down to lows that we haven't seen in over 3 years, and trading has been halted several times already. Again, if you are new to this channel, I have done a bunch of videos covering the coronavirus and a bunch of updates. I'll link them all down below in the description. You can see all my videos that I've done. Of course, don't go there before you have finished watching this video. This recent market volatility and concerns over a supply chain disruption have also spurred up concerns of an upcoming recession. Some people are even saying we are already in a recession. Well-to-do investors are battening down the hatches, according to the chairman of Tiger 21, a high-end exclusive club for very wealthy investors. Tiger 21 is essentially a peer-to-peer learning network for high net worth individuals, founded by Michael W. Sonnenfeld in 1999. Sonnenfeld says that this is a black swan event that you couldn't have even predicted a month or two ago. A black swan is defined by an unpredictable or unforeseen event, typically one with extreme consequences. It's an event or occurrence that deviates beyond what is normally expected of a situation, and that would be extremely difficult to predict. This term was popularized by Nassim Nicholas Taleb's book, The Black Swan, The Impact of the Highly Improbable. Sonnenfeld said most people who sold businesses and are in wealth preservation mode are much focused on mitigating losses as opposed to seeing a huge advantage of the situation. Tiger 21 is an organization of about 770 people with at least $10 million to invest, and it stands for the Investment Group for Enhanced Results in the 21st Century. Sonnenfeld added that the real goal would be what's called an all-weather portfolio. He stated this is a portfolio that could survive the bad times and thrive in the good times. And the way you achieve this kind of portfolio, he said, is through prudent diversification. But this also includes building that cash cushion. You may have heard this phrase before. It's a slang term in the investing world for the belief that basically cash is a more valuable and flexible tool in investing than any other tool. It could be typically used when securities in the stock market are at extremely high prices and investors are looking to save their cash and wait for prices to drop so they can get a better deal. But it could also actually refer to the fundamentals of a business, like the cash flow or balance sheet of a business. Warren Buffett is a strong advocate for this, and a lot of cash on hand is normally a positive sign for a company, while strong cash flow allows a business more flexibility as far as business decisions and investment ideas. So members of Tiger 21 kept about 12% of their portfolios invested in cash and other equivalents during the fourth quarter of 2019. This is a position that they've held for the entire year and the highest it's been since 2013. So according to Tiger 21's fourth quarter report, having this cash buffer allows you to endure up to 4 years of market turmoil without having to liquidate your investments. They're also ready to snap up investments at lower prices. Here is the chart and graph for the Tiger 21 asset allocation through the quarters and years of 2016 all the way to 2019. And it tells you here the asset class. There's cash and the equivalent, commodities, fixed income, hedge funds, miscellaneous, private equity, public equity, and real estate. If you look here, they're holding a lot of cash, more than the other years in 2019, and they'll be ready to scoop up some investments at very good cheap prices. Now, in addition to cash, investors have also tiptoed into safer investments. Their fixed income allocations have ticked up slightly, hitting 10% in the fourth quarter. That's an increase from 9% in the third quarter of 2019. Sonnenfeld said that preserving wealth starts with minimizing capital losses and not reaching for unrealistic returns. In addition, Tiger 21 members have also kept a 1% allocation in commodities, including gold, to offset stock risk. So although Tiger 21 members are positioning themselves more defensively, they're still ready to snatch up any opportunity if they've had the chance to kick the tires. For instance, these investors have ticked up their allocations into private equity in the fourth quarter of 2019, and now they account for 24% of their total portfolios. So that's a notch up from 23% in the third quarter. So rather than investing in large private equity funds, these investors would rather invest into smaller companies. This is so they could share their expertise or be actively involved in management. According to Sonnenfeld, if you've been building a business for 20 or 30 years, the only way you could have possibly done so is by managing and being really good at managing the downside and being able to have the resources to cover the unexpected. And he added that's different from how most people invest. Now, most of the Tiger 21's club's wealth is built in real estate, and this sector continues to be the greatest share of their portfolio, with 28% allocated in real estate, but that is down from 29% in the third quarter. Public equity does continue to hold steady with 21% of the investors' holdings. Sonnenfeld said that members have had an abiding faith into real estate as well as long-term businesses, but he did say that even in this market, the coronavirus has had a devastating effect. Now, the reason why most of their portfolios are in real estate, and if we take a look here at the chart of the 2008 Great Recession, you'll see that rent prices actually did not decrease much at all. Real estate is one of the most stable assets during a recession, no matter what the cause is. The reason is because people still need a place to live in. That will never change. And so even if let's say a middle class person is forced to leave their home, you'll have an upper class person that maybe lost a little bit during the recession move into your unit. So especially for the higher net worth people out there, having some real estate is a great way to diversify your portfolio. In times like these, it's all about having at least some diversification into your holdings, so that way you can offset any risks that you might see from one company. But in addition to having that diverse portfolio, you are also going to want to have some cash on the side. I have some cash ready to buy up. For me, in these last couple weeks, I have been scooping up a lot more shares at these lower prices, and I will continue to do so and unleash some funds that I have sitting in, so that way I could actually get these really cheap prices, and they will probably be of great benefit in the long term. While no wizard out there could possibly predict how long this virus outbreak will last, as well as when these prices could see a rebound, having a diverse portfolio as well as having cash on the side will be very advantageous to you. So tell me down in the comments below. I'm curious to hear how you are protecting yourself, of course, from a health standpoint, but in this case, more of a financial standpoint from this outbreak. And I want to hear what you might be doing differently, where your money might be allocated that isn't usually. Tell me down in the comments down below. I'm curious to hear. Hope you enjoyed that video. If you did, if you got value out of it, be sure to give it a big thumbs up, smash that like button, and maybe share it with a friend so that way they can learn as well. And if you'd like to see more videos from my channel, I post videos every single week covering business, finance, entrepreneurship, mindset, strategy, and tips and tricks from my own experience. Also, be sure that you hit that little notification bell as well. This is that way you'll be notified every single time I make a new one, so that you're first in line to see it. Looking forward to seeing you in the next video.